So I'd like to invite Bijou on stage, but also all the brilliant speakers. But I'll leave it to Bijou to introduce them to you. Thank you, everyone, and please a big round of applause.
So thank you, Elena. Good morning, everybody. My name is Biju Suresh Babu. I'm the open banking lead for a technology company called Fiorano, and your moderator for today. So it's really exciting to be here. We've got a very, very interesting panel or topic of discussion, and I'd like to welcome you all to the session. As you can see, we have a panel from some very, very large, well-established traditional banks, as well as Yolt, one of the very early, successful and very well-known TPPs. So without further ado, I would like to hand over to the panel to introduce themselves, starting with Paulina.
Hello, everyone. I'm Paulina Evstifieva. I'm heading regulatory strategy at Deutsche Bank for digital, so I'm engaging in the lobbying and advocacy on the topics related, including artificial intelligence, open banking, blockchain, etc.
Thank you, and my name is Sara Häger. I'm heading the open banking community in Nordea, consisting of about 5,400 third parties at the moment. I'm also working in the execution of implementing PSD2 and creating the open APIs, so very deep into the open banking space.
I am Søren Andreasen, and I'm Chief Digital Officer at Danske Bank. I'm working here in the UK, where I'm part of the executive team. We are one of the CMA 9 banks, so we have about 2 years of experience with open banking. And of course, we're also doing open banking in Scandinavia, which is our primary markets.
I'm Leon, Chief Business Officer at Yolt, and we have 2 years of experience connecting to the CMA 9 open banking banks, so we were the first TPP to be live with open banking. And I head up our Yolt Technology Services business, which is essentially also providing the API capabilities as a service to other businesses in the market to really empower everyone with open banking.
And hi, I'm Caroline Ambrose. I'm accountable for open banking at Barclays, which for us means 2 things. One, how do we make sure we produce APIs to allow open banking connections with our third parties across both the UK and Europe? But then also, how do we think about it from our customers' perspective, and how do we think about what opportunities that open banking affords, and what can we bring to the market to help them with their day-to-day lives?
Thank you for that. So just to kind of contextualize the conversation, PSD2 has been live for almost a quarter now across most of Europe. And when this started, so there's been a sea change in the way banks have approached PSD2. And this is what we see as a technology vendor, from some initially saying it's not really going to be a big deal, to some saying we're going to do the bare minimum to comply, to now many thinking of what they can do beyond compliance. So from a conversation starter standpoint, I think the first question is, what are the threats you see, each of you, as to the banks if they don't do beyond the bare minimum for compliance?
I'd like to answer the threat of not acting proactively to not or to stay with the compliance and not move forward. For a bank, PSD2 compliance has been a huge investment, and it's been taking a few years, and we already now see that there are still many banks that are not yet compliant and that are still struggling to get compliant. And I think if you plan to stay with only compliance, then you will have made a huge investment to keep the license to operate that we as banks need. Yeah. But there are also several different commercial opportunities based on it that you can utilize on if you have made some strategic considerations in the beginning of the implementation.
Absolutely.
And just to add to that, I think I actually don't think that banks have just worked out that it's not compliance or it's only compliance. I actually think they worked that out a few years ago. Yeah. And the way a lot of them, and I can only speak from my experience at Barclays, but the way that we worked it out was we went and spoke to customers and we said, if you can do these things, what problems could we solve for you? And customers have got lists of answers to what that could be, right from make my day-to-day banking easier by putting everything in one place, right through to actually if I have financial difficulty, help me use my money more effectively, right through to I'm a business and I want to be able to do my accounts in a more efficient and effective way. So I think really anybody who still thinks it's a compliance game needs to go and talk to their customers, because they'll tell you there are opportunities to solve problems for them.
And that's quite interesting. So again, you're from Barclays, big banks, and you've taken a very, I guess, marketing-driven approach to this. But there's a lot of banks out there, right? And everyone's not following the same model. But that's quite interesting. So if you look at what those opportunities are beyond compliance, what does that look like in terms of what the opportunities could be? Because there's many conversations in terms of marketplace or better interactivity. What does that look like?
I think there's. I agree with Caroline that everybody is already thinking it's more than just compliance, but it's also very difficult to even comply. And I think UK is nice that it's a good example for rest of Europe being 18 months ahead with open banking. And PSD2 in mainland Europe, a lot of banks are still struggling, and we are as Yolt fighting with a lot of banks and trying to get on board and use the production APIs. But what we see, and also the questions we get from the Yolt Technology Services or the capabilities, is around SME lending is a very good opportunity. So lending in general, where you can get structured data from an API into your credit decisioning process and really streamline that process, and sometimes even lend to a business or an individual that you otherwise would not, because now based on the transactional behavior you can actually have a better prediction. And the other thing is a lot of traction now is getting on the payment side. So PIS is seen as a very viable alternative to credit card-based payments. And it's a trend where it's kind of almost funny to see that before everybody was using their acquiring bank, then everybody moved to Stripe because they were cheaper, and now everybody is seeing, well, it's still more expensive than PIS. So I think there's definitely those opportunities beyond compliance.
Thank you, Leo.
Maybe to pick up a few of the points that have been mentioned just now. So what PSD2 has done is that it allowed new entrants to the market and has said, okay, so apart from the banks now, we want third-party providers to get access to the accounts and to the information of the clients, and to be able to initiate payments on their behalf. So which opened up a lot of opportunities for the new entrants, but then also the banks can take exactly the same role. So what has happened is that the way, of course, when PSD2 just came out, I think the first reaction perhaps has been of the banks, okay, so we need to make sure that we're in compliance, and then the bank started to investigate, okay, how can we take a role of the third-party provider ourselves, right? Because there might be a number of opportunities when you're taking this role to initiate a payment on behalf of your customers or for your customers as the corporates, for example. IATA is one of the examples that Deutsche Bank is piloting, is the push payments. So that's where we relied on the new requirements provided by the Payment Services Directive, where we are able to initiate payments upon the instruction of the customers purchasing the tickets, the airline tickets. So I think this is one of the examples, and clearly I can see a lot of use cases where the banks are moving towards in this direction, and clearly we're going to see more and more. But the reality is, yes, we are at the stage of the compliance, and that's what we need to nail down as the banking community. As you correctly said, it's our license to operate. So once it's done, then the question is, how can we build up on the basis of the rails that we have created for the open banking? How can we leverage that more further? And then the regulators' discussions around the open finance can help us building and leveraging this more.
And I have to say, I really love that IATA case. It's so beautiful.
Thank you.
To speak about also an example that I can speak about publicly in Nordea, it's a big airline company that we are providing consumer financing through. So we've been building API solutions together with a third party, and now the airline is providing their services, and they're offering their customers, the consumers, to purchase their tickets with consumer financing then provided through the API. something that was previously form-based, file-based, is now more or less instant. And I think that's using the corporate clients that we have as an extended reach, so to say, to bring the possibility to get real-time data instead of batches. I think that is one of the absolute biggest opportunities going forward. I was here in London about 2 months ago in September for the Cybers conference, and stood here pretty surprised when Swift was standing up and saying that the file formats that the corporates are interacting with will die out. So for those who are in payments, and I'm sorry for stepping into payments, but all the MT940s or MT101s will be removed by APIs instead. And for our corporate treasuries, our corporate clients, that will be a huge technology shift when they're moving from file-based into real-time API-based solutions. I mean, I'm basically comparing this one with moving from sending letters into sending emails instead. Instead of uploading, sending, and then downloading, or sending a letter with going to the postman. Postman is delivering, receiver is receiving. You can get the instant communication with your counterparty. That is, I think, the absolute biggest use case for open banking.
I agree.
I think I might have a little bit different view on things. I think now we are almost 2 years into open banking, and looking at what is actually enabled by open banking and PSD2, which is actually a quite limited scope, I don't think we've seen any big successes actually. And that's not a hypothesis, that's actually looking at what's happening in the environment around open banking. For me, I had big expectation. I think it's been quite a disappointment, to be honest. And reflecting on it, I can see that a lot of the tech companies that are trying things out within open banking are facing some challenges. I think the challenges they are facing is that the distribution is something that they have severely underestimated. How they actually gain momentum and traction? How do you get onto a user's phone? Most of our customers only use about 10 apps on their day-to-day basis. How do you become one of those apps? It's very, very hard. I think the trust is something that we had probably underestimated, how much trust you actually need to gain with a client before they're going to get out your bank credentials. That's something that we have seen is a big inhibitor for a lot of our clients to actually start using open banking. They trust the banks, but they don't necessarily want to give it to a third party. So I think those things are actually making it, not obvious things, but things that we can see are actually inhibiting the spread of open banking. And then the business models. With account initiation or payment initiation, account aggregation, you can only do so many limited things. And I think looking back at the last 2 years, we haven't seen anything that's really gained traction. And the things that we are seeing gain traction, like Yolt, you could do before with screen scraping. And if it made sense, you would probably have done it before with screen scraping. So, but again, this is only the beginning. And I think we have great things to see eventually from open banking. And also the way it's increased the level of maturity with banks now working with APIs. Yep. We're seeing some commercial models like the one you're mentioning appearing, but open banking itself and PSD2, I haven't seen any big changes and threats or opportunities based on that, to be honest.
Because I agree and I disagree with you. So I agree with the fact that open banking is the start of a trend. So it's opening up your payment accounts, which the scope is too narrow. But then we will move into open finance, which also the FCA is leading, and eventually we'll move to open data so that you can also get your energy consumption and get everything on the API. I think then you're moving to a space where you can really provide a full picture to your customers. But on the other hand, I do think that there's some traction, and as long as you can really show that you're adding value for the customer, and for example, with the Yolt app, we can really tell users how they're spending their money, how they can save some money on their energy on different things. And if that's a clear use case for a user, then it doesn't matter if indeed it's open banking behind it, if it's screen scraping, if the technology itself doesn't matter. You need to solve a problem for your users. And the APIs are a lot better than screen scraping, but indeed, as long as you can get access to the data and help solve a problem for your customers, that's what it's about. And then this is, to me, start of a trend moving towards opening up.
I agree that we are seeing some valuable things for the users. What I'm talking about is business models, because the fact that you can aggregate and you can create better financial management tools, we're just seeing the bar getting raised, and right now we're seeing a lot of the banks are actually incorporating that in their own apps. I mean, we're already aggregating most of the several hundred banks onto our mobile app and providing financial management tools as well. So you're just seeing the bar getting raised, but it's not as such creating a revolution in my mind. It's raising the bar for the service we can provide to customers.
I think that's all very fair. I think anyone who thought that open banking was going to be a revolution, actually, I think was mistaken. But I do think we are seeing an evolution.
Evolution.
And so I think two points to add, and I agree and disagree with all of the points. One, we should feel really proud, I think, in the UK. We've built something from scratch. We've got over 100 third parties providing new and interesting products and services to customers, and somewhere between 1 million and 1.5 million customers using it. Now it's not enough, it's not big enough, but actually that's pretty good for 1.5 years, 2 years worth of work. Yeah. There's a lot of businesses out there that if they said we managed to go from something that was 0 to having 1.5 million customers using it in 2 years, particularly when it's something that's quite sensitive, like data sharing, actually, I think people would feel like we're doing okay. So I think number one, we should kind of give ourselves a pat on the back, particularly in the UK versus what we see in some of our kind of neighbouring countries across Europe. The second point that I would make is there are some use cases which clearly have value and are the things that people are looking at. The thing that I think is really interesting, and I hope we'll see over the next couple of years, is I really hope we'll see some new true innovation. So PFM is really good for customers, really valuable, but how do we solve problems that we've never solved or never thought about solving? And I think that's where I hope we start to see some innovation over the next kind of year, 18 months. If we stop at just the use cases we envisaged 3 years ago, we haven't done enough for open banking and open finance.
But maybe to be a bit of an advocate for the open banking is just to take a step back and just say, okay, the regulatory technical standards on strong customer authentication, secure communication have just come into force, right? So the banks have been working towards making sure they're in compliance for that date, right? So which means that the gates were not open for the third-party providers before, like, for the last 2 months. So, and I think concluding that we have got like success stories, it's a bit too early. However, I would say also there are some interesting statistics I came across recently. FCA has registered just a bit over 100 of third-party providers in the UK. Is it a lot?
No.
I don't think so, right? So let's see so how to evolve.
I would also like to emphasize the fact that we're facing a technology shift here. And when moving into a technology shift, and I'll take the Apple and the iPhone as an example, it took them 10 years to dominate the market with that new technology. And we are right now in our first year. Yeah. So I think we are having way too high expectations on what we are to see in this year and in next year. But we are having way too low expectations on what we will see in 8 years or 9 years. I don't think we're going to recognize banking in 8 or 9 years. I think we're going to face the same kind of change that we've seen in the traveling space, that we've seen in the telecom space in the last few years. It's going to be a change for the banks to adapt to these new business models and to not anymore own and protect the customer's data that we've done since our existence, since we were founded. For the first time, we've always been protecting the money, protecting your money. And now suddenly we are to move into that huge cultural shift of sharing, of opening up. I mean, the cultural mindset shifts that is needed for this, it's a huge thing. And it's not to be underestimated that we need to change this in the banks and to work with it, still in a safe manner, because it's about all our money. And that's what we are using every day to enable our lifestyles and to enable our lives and our families.
So data is key, trust is key. Now, one of the sea changes we saw was, I guess, GDPR started off last year, where banks were thinking it's my data. And I think that shift happened to saying it's not yours, it's actually the customer's data. And you need to let the customer do what he or she wants to do with it. Coming back to the point about distribution, which is still a bit of an issue, I guess part of the question out there is how much is trust versus convenience. Customers will do a lot for convenience. Now that's coming back to the use cases themselves, right? So a lot of people still don't know about open banking. I mean, no one goes out to buy open banking. It needs to be fairly pervasive in the way it kind of spreads across. Now, Barclays is a good example of how you've done it. Yours is a very specific open banking proposition, I guess. From that standpoint, how do you see the use cases evolving? So we mentioned SME lending, that's very, very corporate. A lot of the ones the general public get to see are B2C use cases. How do you see that evolving? B2C versus B2B, corporate versus retail. Exciting use cases. Anybody?
So I think we touched on it a little bit. I think I'm going to answer a couple of questions because I think there are a few points in there. So first is the kind of value or convenience versus trust.
Yeah.
I think we shouldn't underestimate we need both. So first and foremost, we've got to see use cases which demonstrate value. And we see customers engage in propositions and then they stop engaging with them because they say there's not enough value. We're actively seeing that in the open banking market today.
Okay.
So that's number one. And that's a mandatory thing. Customers expect that. They won't come and work with third parties or banks if they don't see that value exchange. And that value exchange has to become higher, I think, the more you move up the scale of kind of personal consumers like you and I, right through to SME, through to corporates.
Yeah.
But then the second point is trust has to remain. So at the moment, customers feel that trust. They feel the trust because the bank's engaged and involved. And over time, they will grow trust in the brands, the third-party brands, etc. But we've got to, at all costs, make sure that that trust continues by making sure the ecosystem is safe and secure. Because the moment that something goes wrong within open banking, that's the moment where customers will start to change their attitudes towards data sharing. And we saw that with things like Facebook, Cambridge Analytica. It's very easy to say that we've got trust, but it's very, very easy to break that trust. So I think, value absolutely needed, but trust, we can't take it as a given. It has to be something that we continue to earn. And then in terms of use cases, I think, as you were saying, that there are some very obvious ones. Aggregation, PFM, that's being done by lots of people. We're doing it at Barclays. Leon's doing it at Yolt. We're doing it at Danske. We're doing it across lots of different places. The question will be who makes it the most valuable for their customers. You've then got a whole set of lending use cases, which I think are really exciting, actually. I think you could start to see some changes in the way that lending are done to different segments of customers. Then you've got SME and business. That exists today. It's just not API driven. So I think the point, Sarah, you were making is we're going from something that's a little bit old technology to something that is new, quicker, and should allow further innovation off the back of it. And then I think there's a bucket of kind of what I describe as other, which is those problems that I describe, which I haven't even thought of yet, which are the things that customers think we could solve. So an example might be, we know a lot of mums and dads spend a lot of time working out what money to send to who from a school perspective, like how do they pay for clubs, how do they make sure that their children's kind of school life works and exists. Yeah. Well, why can't open banking solve that for them? We couldn't solve it before. It was harder. It was clunky. You have many different bank accounts, different people with different accounts, different places. But maybe that's an interesting use case. So that other bucket, I don't know what's in there, but I'm hoping there is a whole set of wonderful brains out there starting to think about what can we do from an open banking perspective. And it shouldn't be the three that we always talk about. It should be the new and interesting stuff. So I hope that helps.
Yeah, absolutely. So and you spoke about Facebook, right? So the Facebook scandal was a very interesting one, but Facebook bounced back. So they lost trust, but they bounced back. And today, there's talk about Facebook, Google, everybody getting into the open banking world. Is that a concern? We have some big banks here.
I think we can handle that one either as a challenge or a threat or as an opportunity, because they will need a bank partner to work in the financial industry. We have seen how Amazon is supplying their customers, their corporate customers, with financial solutions, with cards, with Amazon Pay, with Amazon Securities, with Amazon Insurances, etc. So they are, I would say they are actually pretty smart in tapping into banking without being a bank.
Big bank, yeah.
Skipping out on all the regulations that we as banks are burdened with and that we are to continue with.
I agree. That's what we're seeing. Apple is doing the same. They partnered as well, and I think that's the way we are going to see the trend going forward. That it will be a big tech partnering with a bank, and we'll also see smaller techs partnering with banks, because running a bank is not easy. It's actually very, very hard. The regulatory environment is insane. Even if you are a Facebook on Apple, it is very hard to run a bank. And I don't think they're interested in having a banking license. I don't think they see enough value in that. And I think we're seeing the same with smaller tech, that they're partnering with bank, because back to your question about trust, it's a good way to gain trust to partner with a bank. Then you get a big fat stamp on it, which people know. And it's also a distribution model. Banks have customers already, so it's a way of actually gaining distribution to clients instead of having to acquire them yourself, which is very, very hard. So we're seeing that all over the space.
So I'm going to come back to that, Svante. So before, we've got about 50 minutes more to go, so I want to open up for questions. So please are sending them through if you have questions for the panel over the app.
Yeah, I was just going to say, I agree that 3 years ago it was fintechs were going to disrupt banking and change it, and now they're actually going to improve banking, collaborating with the banks. I think that's a big mindset change. And on the evolution factor, I was just thinking of, anecdotally, I moved away from London like 8 years ago, and now I travel back here a lot, but I still use my Oyster card, and I feel like a dinosaur because everybody's using contactless and their Amex card and their phones. But that's also been an evolution. So contactless wasn't, everybody was using it on day one. It took also 5 to 10 years before everybody was using it, and now Oyster, yes, it's used for tourists and people like me who
archaic.
Yeah, exactly, archaic. So
you're a dinosaur.
So I think that's really where the stage we're at. So I agree indeed that there's a lot more that we will see that will come, and maybe as an example, in the future, actually my debit card or my bank account can actually prevent me from spending something that I might not want to spend if I have had a pub night and I want to get some more money from the ATM, and I set a rule to myself like, hey, don't do that. So you can actually almost subconsciously help people to be smarter with their money. I think that's the where it should go.
But I think just to pick up the question that you asked about the trust, I think it's a really interesting question, because if you look into some of the solutions that came out before PSD2, so they allow the customers to use, or vice versa, the customers would allow their representative third-party providers to use screen scraping, which means that they would give away their credentials to the third-party providers. So I always would wonder who on earth, you need to have like such a great level of trust to the institution, which isn't your bank, to give out your credentials. So which tells me that sometimes customers prefer convenience, and then yes, the brand recognition, etc. So that work in favor of certain companies that allow that. But then PSD2, what has done is that actually it has brought more protection to the customers, right? So I think now talking about open banking and the trust that the PSD2 will help to create, that's exactly one of the objectives, right? Is to enable this innovation for more companies to get into this space, just because all of this procedure, security, authentication is so highly regulated for everybody now, not just for the banks, but also for third-party providers, that it makes using, those new entities quite, secure and protected for the customers, which will definitely define further, trust in the system.
But to be honest, most customers don't know the difference. They download an app and they really, I mean,
That's
if you ask
fair,
somebody down on the street,
Yeah.
they would not know what open banking is.
Exactly.
So for them, it still feels like they're giving away their credentials to a third party.
Well, yeah, so
But this
for-
is exactly the point, sorry, it's just what to make, is exactly that the customers, they wouldn't know, although this now kind of regulators have taken care to protect them.
I'm not.
They still don't know.
I do agree, but if you look at all the research we've done in the last 2 years comparing screen scraping versus APIs, in the API solution, particularly in the UK where we use redirection, the customer tells us that they're more confident because they see the TPP or the third party, and then they see something within the bank, but they don't have to give that third party anything to do with the bank. Versus if you look at the screen scraping solutions, they were typing in, my username and password is X, and actually that is quite an alien concept. So I do agree with you. I think value over trust is the right way to look at it. But I do think we will see more adoption of open banking versus screen scraping because of the fact I don't need to share my credentials. And also being candid, it gives us the opportunity to tell customers don't share credentials because it's one of the biggest things that fraudsters use to be able to take money from customers.
Yeah, that's partially true, but also at Yolt we also thought that when we moved from, is this on? No, I don't think so. From screen scraping to the APIs, in the beginning there was a web redirect, right? So people were redirected to the online banking where you then log in with your credentials, username, password. And we actually saw that the difference in the success rate of adding a bank to the application
goes
was
down.
not that much higher.
Yeah.
But now with the app-to-app redirects, now we're seeing like almost an 80 to 90% improvement on that success rate because maybe it's even a higher trust factor, but it's definitely a higher convenience
easier as
factor
well.
to add that that bank connection. So
And to that point, Leon, it links to the fact that customers in the main, don't use online banking anymore.
that's also
You know,
true,
people
yeah.
are migrating to the app. So the challenge with screen scraping was, barring the credential sharing, which we definitely don't want to be doing, customers don't use online banking anymore. There's a segment of society that does. There's a segment of customers, particularly SME and business, but most customers now want to be on their app. They want to be on their phone. So you're right, as soon as we introduced app to app, that's what saw the takeoff.
So it's coming down to the battle of the app essentially, because I guess everyone does aggregation, right? Very straightforward. It's going to come down to, will the banking battles of the future be fought between who has those apps? Because I guess no one's going to keep 10 banking apps on your phone anymore. You can aggregate, you can initiate payments.
I think it depends on customer type. So I think for the people like you and me, it will come down to which app gives you the most in terms of your day-to-day management and which then which is the easiest, which adds value to your life. I think if you look in the SME market, actually it's different.
Oh yeah.
Because then it becomes about who's going to do the best job at managing my cash flow, who's going to make my business accounts the most efficient, who's going to do my tax return for me.
Yeah.
So I think different segments will want different things, but I do think it comes down to, it's back to the point of what problem do customers want you to solve, and are you solving it and solving it well?
Lovely. So I'm going to take some questions now. So one of the first ones we got is, what changes in the skill sets, mindsets, and behaviors in the workforce of banks and fintechs are required to make open banking successful? This is from from the audience.
I think one thing for sure is that there's two things. On the one hand, and it was mentioned here, I think as a bank, it's a completely different mindset from securing and sitting like a mother duck on the data of your customers rather than just letting it fly out almost. So that's a bit maybe an analogy. But also the flip side is also, and we see that as well, is that when banks are starting to look at doing the consumption of APIs of others, that's also completely game changer, and you need to think differently because suddenly you're not relying on your own internal processes, but you're reliant on the performance of the API of another, which you cannot guarantee is a 99.99% uptime, for example. And that's also a mindset change that if you do aggregation in your app, for example, your own app, your own part you can control. The external data you cannot control as good. So that's it's almost conflicting mindset that you're reliant on data of others and you need to expose your own data.
Together with that, is this mic on? Together with the fact that it takes a long time to build trust with a partner, but it takes only a moment to ruin that trust. It's one action that can ruin that trust. So it's a very cautious way of playing. And I would say that we are in one of the most exciting times in banking right now, because we will see things happening in the market. We will see new formations on the market. We will see new companies on the market. Companies will come and go. Some banks will remain, and some banks may not. But again, now I know I'm repeating myself, but I'm pretty sure that we will not recognize banking in 10 years to what we see today.
Absolutely. Sorry, Lena.
Yeah, no, maybe to pick up on this point. So, I mean, the banks are now in the position where they have to adjust, right? And then I think that the kind of question of, changing of mindset is in the hands of those who have kind of choice, right? So for the banks, it's not a matter of choice, right? We have to comply. So changing the mindset, it already has been done by the regulators for us. So the regulators have said, now you do it. So because we have not been talking about open banking like 3 years ago or 5 years ago, and the reason for it, why? Because there were no mandatory requirements to disclose the data, right? There were no PSD2, there were no open banking in the UK. So now we're talking about it, and the reason for it, because the regulators told us that we have to do it. So I think this is one of the parties, right, to this ecosystem is the banks. The other party is the third-party providers. That's where their mindset will be driven by business opportunities. So they will be thinking, okay, what can I create for myself? What can I create for my customers? And then the third player in this is the user. And that's again coming back to the question of trust from their perspective, right? Whether they're going to trust their services provider or not. So that's up to third-party providers and banks to figure out the best use cases.
Lovely, thank you. So I'm going to go on to another question. To the European panelist members, right? Fintech in the UK tends to be, it's one of the top. Fintech in the UK tends to be a bit London obsessed. What can UK fintech learn from European banks or fintechs? Maybe.
I think the short answer is that Europe is bigger than UK.
I don't know if I agree with that statement, but especially in Sweden, we're actually seeing quite a bit of growth within open banking and fintechs right now.
Yeah.
But I think what I'm seeing is that the regulatory barriers are quite high still. One thing is, yes, we have PSD2 APIs across Europe as well, but banking is still a very different deal in the different countries. The products are very different. Regulation around those products are very different. And society is very different. If you go to Germany, it's still very much a cash-based society. If you go to Sweden, you will find stores that don't accept cash anymore. So Europe is a very different place, but so is the UK, to be honest. London is very different than if you go a bit north. So I think just being aware of what's going on is essential, and I think most of the fintechs are starting to see that now as they grow. They figure out how different it actually is. But I think it would be good to probably validate some of the business cases before they sell their growth potential to their VCs. Yeah.
But I think we kind of educate each other, right? So banks are learning from fintechs, the fintechs are learning from banks, and I can see now a lot of partnership and merging in this space. So I think it's a matter of collaboration and what we can do together. I think that would be on the agenda.
So great point on education, and we have 2 minutes to go. So I think one last question for the group. So to what extent are the incumbents responsible for customer fears to share credentials and should be pushed to educate customers? Second from top. I know it's difficult to read from where he's sitting, but
can you read it again, please?
To what extent are the incumbent banks responsible for customer fear to share credentials and should be pushed to educate customers? How much of the responsibility on trust, we come back to SCA and all the things we spoke about, right?
So I think it's on all of us to help customers understand how to protect themselves, and not just customers, but our friends and our family. I kind of get marginally irritated by the question because actually, if you look at one of the biggest things that harms customers in the UK today, it's fraud and scams.
Yep.
And the way that scams are conducted most of the time means that customers are are duped into sharing their credentials. And they're not just the most vulnerable people across society, but a broad spectrum of people. And so I get to the point where I say, actually, it's one of our biggest problems from a banking perspective. And therefore, it's down to each and every one of us, whether we're in a bank, whether we're in a fintech, whether we work for global telecoms. We need to help educate customers that some things are real and true, and some things are people trying to do something bad. And we need to help them recognize what that looks like. And I think not sharing credentials is just one of them.
Yeah.
If you look at PIN numbers, we all know the rule that says don't share your PIN number with anybody.
Exactly.
Everybody knows that. If we could get to the point where we could make that rule set a little bit bigger so that everybody knows the 3 things they do are don't share your PIN, don't share your credentials, and we'll never ask you to move your money from one account to another, actually that would be a hugely positive thing. So I'm not sure it's incumbents, and I'm not sure that it's about fear. I think it's about we need to educate people.
Super.
Yeah, maybe just a small thing. I think we're in a complex situation now because up until PSD2, all banks had in their terms and conditions, don't share your credentials. And then PSD2 came in, and now actually you are allowed to share your credentials with trusted third parties. But how does customer know if it's a trusted third party? Plus, for years and years and years, people in the banks have told their customers, don't share your credentials. And then now suddenly it's actually in the terms and conditions.
Agreed.
And within the banks, we see that our customer care to date still gets a lot of questions like, I'm told not to share, can I share? So it's a complex...
And that's why I think open banking is really powerful. API driven means we use newer technology and we don't have to share credentials. Like win-win for everybody.
Agreed.
Lovely. Listen, we are out of time. So Caroline, Leon, Sren, Sarah, Paulina, thank you very much.
Thanks
Please
a lot.
join me as we give a round of applause to the panel.